All right, hello, welcome everyone, welcome everybody. Um, Today we are going to be doing a little bit shorter stream, I believe. But yeah, probably until 10:30 I'll be there. So I'll be looking to see the opening range at 9:30. Let me see what we have in price today. So we traded to that daily bearish fair value gap yesterday that pretty much capped the price action. On the upside, returned back into the opening range gap from yesterday, touched to the high. Sell side here and here still open, so far inside range, inside day. Okay, let's go to the hourly chart. Nice reaction here from the daily CB. Traded lower, touched the RTH high, and now kind of like staying inside of a range, smaller range. Alright, so I will clean up this chart a little bit. So the key levels, this should stay, this should stay. These are my annotations from the London Open session trade that I did. Let's remove them. Alright, so I want to refer back to the new day opening gap from today. It's right here. So NDOC high, current, NDOC low. Plus I want to annotate the 414, which is right here. That's the close, and let's just make it black, and that will be the opening range high, I believe. Okay, so let's go back. These are the levels. New day opening up. This is not current. This is yesterday, and this is yesterday. Perfect. Right now we are kind of like hanging in the middle between this new day opening up here as a premium and this one as a discount, basically consolidating, which yeah, I'm kinda waiting for the 9:30 to show its hand a little bit. We will be opening with a discount opening range gap, so I guess my initial idea would be sweeping this buy side here and maybe gravitating towards this new day opening up here. That's kind of what I will be looking for. So let me calibrate that. I will add this buy side here. That's kind of smooth. And the size potential of the gap would be around 80 handles, which is very, very preferred and favorable opening range gap. So yeah, that might be a fair session. We'll see. So this is basically the pre-market buy side liquidity, which is admittedly very smooth and very clean. This high is lower than this one, so that's a high probability candidate for a run on liquidity, while the sell side liquidity was already like smooth here, damage, disrupted, this disrupted again, kind of like, you know, digging deeper, poking the sell side, while keeping or leaving the smooth relative equal highs also here as a minor buy side. So this is also very nice pool of liquidity. I'm not mentioning it here because it's close to this buy side and I don't want too many lines on the chart, but I guess this is kind of like my initial idea. How we open, how we trade the first couple of minutes, we'll see, but nonetheless this is my preferred bias, so to say, for the first 30 minutes to 1 hour. Alright, so 2 minutes until the 9:30 open, and we'll see what we get. So basically this is where my attention resides at the moment. 1 minute until the open, and the opening range gap will be a discount one, and it will be quite larger one than it was 5 minutes ago, so it would be over 100 handles, which is technically ideal. We'll see how it goes. So I'm waiting for the opening price at 9:30. There we go. So this is the 9:30 open right there. Let's make it black and like this. Opening range gap low. So now I want to measure from here to here, and the 50% is below the buy side here. So the buy side here, if it's gonna go for the 50%, it's going to go for the buy side. That's for sure. So far tapped into the lower quadrant. Maybe I will do the text on the right so we can see better. And that's basically the initial ideas, the initial draw. Here, the buy side, upper quadrant, and as far as the new day opening up here. Now I want to see and study how and if price will be able to reach those levels, and that would be indicative in potential strength or weakness that would be implied into the later portion of today. So far, price stopped very close towards the consecutive encroachment, failed, but yeah, that's still what I'm willing to see as a draw on the upside. The minor buy side liquidity here was swept, and price kinda rejecting this, which yeah, I like to see that, to be honest, because it kinda looks like a resistance here, and that it's reacting off of that, which I believe it's still likely to be fleeced to the upside. But yeah, I guess so far so good. Yeah, so this is the discount opening range gap, and it already opened below the PM session low from yesterday, taking sell side. So that also makes a better odds to see the buy side taken out, I believe. No first presentation as it is so far, and it kind of looks a little bit fuzzy, so yeah, banging around. Nothing that I'm like particularly interested in terms of like a trade. It can mess around here a bit, and it so far looks like damage is being the main agenda for this opening range, to as much damage before the real or cleaner price run will unfold. So I prefer to wait. Alright, so now trading below the current low at 9:30 and snapping below the pre-market low here, taking another pool of sell liquidity. now displacing into the previous day, new day opening up, and showing displacement to the downside, really expanding through these levels. And yeah, that will be likely first presented fair value gap in, so the 935, we will note that 935. Yep, that's the first presented fair value gap. Because we cleared the sell side, because we tapped into the discount, I'm potentially still interested in running the buy side liquidity, because it feels vital. Even if it wants to go lower eventually today, it would be quite reasonable for them to take out the smooth buy stops. So I'm looking if this first presented fair value gap could act as a potential bullish inversion fair value gap. If it can, then it kind of like unlocks the idea to potentially reach towards the 50% of the opening range gap and the buy side here, and maybe explore a little bit higher, but that would be the first objective on the upside. Alright, so we are retrading back into the first presented fair value gap. So far, consecutive encroachment was tapped and price is reacting off of that. Generally, unless it falls completely out of bed here and starts displacing lower, this is still preferred draw, in my opinion. Right, so we are trading above the high of the first presented fair value gap. I'm watching if we can close above it. That's what I'm interested in. No close above it as it is for now. Also, it traded to the high, slightly above it, but closed below the 50%, and now trading lower. So that might either be weak or kind of sloppy in this area. Maybe let's maximize this 1 minute chart so we can see better or cleaner for now, because this is kind of like the game plan for now. Good morning, Money Glitch, and good luck with your trading. Alright, so far price is hanging around this first printed fair value gap. The bodies are staying rather in the lower half, but it's not really moving away as it is right now, which kinda still makes me wanna wait and see if we can maybe trade above it and then use it as inversion to run higher. At least that's what I would prefer to see, because we've taken many stages of sell side liquidity in a row, which generally kind of like wants or requires some measure of retracement, and that would be a great area to target for any retracements. But yeah, still to be seen. First 10-12 minutes of the opening range, we also opened, snapped this little highs by a tick or two, and then dropped lower. So it's really priming that it wants to go lower while the liquidity is up here, right? So it would be very convenient for the smart money to be accumulating, I believe, here. This discount week consecutive encroachment respected, that's what we are trading off of right now into the first presentation again. So because also it repriced so many times into the first presentation here, I don't think it's in a rush to go lower, because if it were, it would literally just tap into it once or twice and then take off, but it's not doing so, which kind of like supports the idea that we might see it trade up there. All right, there we go. Because it's kind of like so close to the price, I don't expect to return back to it though. I would not expect that, to be honest. I would just expect to just quickly run. Don't like waste time or anything like that. Okay, it does give a touch to the inversion fair value gap and trades quickly through it. So yeah, that would be way more constructive if we didn't come back to it at all. But okay, let's see. If it closed below it, then that's not an inversion fair value gap yet. That's fine though. Still kinda waiting. So this is basically the type of day where they actually want to deal real damage to people. And yeah, I was kind of anticipating this potential manipulation or higher degree of manipulation. So traded to the previous day's RTH low perfectly, and now reacting slightly off of it. There is this nearby relatively close sell side that they could tap into if they want. I believe also we stopped just at the consecutive encroachment of this discount week, and exactly that's it. 50% there, respected with the bodies. Damage was done here, so if we can get above this first printed fair value gap, respect the upper half, and don't really explore the lower half too much, then yeah, this is basically where I'm looking for as a potential target. It makes sense. But yeah, also this is a high resistance liquidity run condition. This is not a low resistance. And there is actually a measure of manipulation here. So yeah, this is tricky opening so far, which is kind of fine. Waiting for the either 9:50 or 10 a.m. is the next go-to idea. The fact that we spent so much time inside of the first presented fair value gap and we don't really have a directional run also is kind of like signaling that we might see some difficult morning session today. Okay, again closed above it, and now I don't want to see the lower half being breached at all. If we do breach that, then yeah, we remain in this low probability state. So I would really want to see signs of precision first, and then potential run. We wicked below the 50%. That's fine. That's permissible, but it shouldn't close below it. And preferably displacement higher would be also constructive. So I'm trying to buy this 15-second fair value gap. There are two of those. If it's good, it should run now. This is kind of like the best case scenario. I'll place the stop right below the 50% of the first printed fair value gap, assuming that it should stay above it if it's good. Because there is like this, you know, larger degree of manipulation, they could color outside of the lines a little bit more, but I just trust that they did the damage already and it's good to go, and that it will run the buy side here. Right, so I really would like to see a large candle stretching higher quickly, not giving much of this range, preferably leaving some gap open. We'll see what we get though. That would be preferred way of delivery. So they basically did the damage here, and now they are running away from it to a level of smoothness to disrupt that and basically unload their positions, if I'm correct. But yeah, we'll see. Let's wait a little bit more. So we have still like 6 minutes to reasonably expect and reach the 50% before the 10 a.m. and because the buy side is so smooth and so close, it should basically just tap above it. And yeah, so right now I will move the stop to even, better than even slightly, because yeah, if it comes back deep, which in high resistance liquidity run conditions it could, I really don't want to participate in that, because yeah, that's you know, less favorable. So it reached back into this fair value gap. It should react higher off of that quickly. If it doesn't, then this morning session is like, yeah, I would give it away and I wouldn't worry about it. That's a nice reaction here. Quickly overtaking this high would be preferred if possible, yet to reach the consecutive encroachment and then the buy side liquidity. So after basically we tap into the buy side, I will like aggressively move my stop loss higher and kind of like manage the position like that. So we get the consecutive encroachment, and now I want to snap into the buy side. Okay, we do right now, and now I'm aggressively securing the position. There we go. Upper quadrant of the opening range gap. That was basically the trade. And yeah, it could maybe still keep on going towards the new day opening gap, but that's with this type of environment, kind of like a gamble, right? This was as far as I would consider as high probability within the manipulation that they did today, because yeah, they did a lot of damage. There we go. W trade. So yeah, let's see what we get afterwards. Let's see. So far we are not mm, not not done with this run up. As I said, this is still potential option to watch, and that's what I'm watching. If we can get up into this new day opening up, and maybe offer even a full closure of the gap. That's possible, but kind of tricky at the moment. So probably if we fail to gain any momentum higher right now, then I would suspect that we could return back into the first printed fair value gap, which would be a deep retracement lower. But yeah, the price isn't that clean, I would say. So there is a small little fair value gap here. I'm watching that as price drops into it, and if it's good, it should quickly pull up higher towards the new day opening gap. Let's show the executions though. Yeah, pretty close to the top tick, but yeah, not there yet. I was off by 4 handles, so maybe not that close, but yeah, I would say good as for this environment. And yeah, as I said, price is failing to gain any ground above it, dropping lower. First printed fair value gap would be logical area to watch, to look for on the downside. But yeah, overall it's kind of turning into some kind of an ugly price action that feels a little bit tricky. But as for the morning session, as for the first hour, this run on the buy side here was already probably the cleanest run so far after all of this mess. So now we close below this, so I'm watching if this offers any inversion sensitivity, which already we are smashing through it, so it's not necessarily there in the cards. Alright, so we closed above this little fair value gap, and that kind of like makes me wanna resume watching for the new day opening up, potentially as the draw, if it can find any ground, but it should not close below it. After it close above it, it should not close below it. That would be important. Okay, stretching towards the new day opening up. I will take off the executions because it's annoying. And there we go, we tapped into that, and now sweeping even higher. So basically all of the targets, even the possibly less likely ones, were reached for this morning session. The bias from the beginning was one-sided, it was bullish. I was paying attention to those levels only, nothing on the on the downside, and it delivered. The conditions were high resistance, that's true, but nonetheless price went where it was expected to go. I hope you guys enjoyed this little session here. 2 people watching gold outlined live, real gems. Alright, so we traded to the opening range gap high, respected that with the bodies, stopped, and now deep pullback to this little fair value gap right there. In my opinion, if we can cap the price around here or close to, and don't really like expand above the opening range gap high, I would expect the first printed fair value gap to be the likely area for like return or draw on the downside. So right now, as we basically reach the targets on the upside, that's like this moment where the price could go into consolidation here. It could go for a little bit of a pause. It could go for a retracement. Then the first printed fair value gap would be reasonable though, but yeah, we kind of need a little bit more information to justify what it will want to do next. So far it looks like it's respecting the high of the opening range gap as premium, and returned back to the consecutive encroachment here, right? So generally, if we lose the 50% of the opening range gap and we trade below it on a closing basis and stay below it, the first printed fair value gap will be the next draw. That's what I'm thinking, at least. Other than that, we might get a little bit choppy or consolidated around here. So if all of that, the high probability is not seen right now. So basically, short-term buy side is here, short-term sell side is here. We are about the 50% of this range, just hanging around. It could go either way. It could take this high, it could take this low. That's why I believe it's 50-50 at the moment. Okay, we traded through the 50% here with a measure of displacement. Preferably we don't go above it. I'm watching this 15-second potential fair value gap, but it was basically closed and just a small little portion was left. So it has to stay open, and then return to first printed fair value gap would be reasonable. So I'm watching if that can stay open. We are tapping into it as institutional order for entry rule. That's fine. That's allowed, but it would need to drop quickly afterwards. Okay, it's closed that with a week. Fair enough. I don't want to see bodies late above this little gap, but we'll see. Back again this 50%, back to the 50-50 type of scenario. Buys it here, sells it here. We are just inside of a range, consolidating. This is the old buy side level. I can take that off. Alright, so we formed a small little fair value gap here. I'm watching that, and I'm watching the high, minor. That's kind of minor, but it's just this short-term high to the left, the only one that we have really linked to the new day opening gap. There is buy side above it, and I'm watching if we can see price trade up into it at all. Okay, so price is failing here quickly. Back into this fair value gap. Honestly, I would like to see it fail here and trade below those lows into the first printed fair value gap now. Kinda, that would make sense in my opinion. So closing below it, it should act as inversion for value gap, so we close below it. So let's watch, let's see. Preferably no closure above it again, and that might offer something. But yeah, if we stay like long time or too much time inside of it, that kinda implies that we are actually gonna stay inside of this range for a little longer. And yeah, probably the PM session would be better or cleaner than this morning session, which is clearly and admittedly a high resistance liquidity run condition. Alright, so we close at the high right away. I don't like what I see here. Right, so now watching another attempt if we can reach up into this short-term high, short-term buy side. But yeah, to be honest, at this moment, price being stacked like this inside of this little range, not willing to move outside of it, not respecting the PD raise, not showing precision, already like a red flag to engage it by any means. So yeah, we went below it on a closing basis, above it on a closing basis, and now we are again like below it. A lot of manipulation here. Yet if we leave like this, the first printed fair value gap, as I said, would be the logical area to watch the price reach. Right, so it broke so quickly and with a large candle like this. Preferably, if it's gonna make the run, it should not return back to this area here. No need for that. If it does, and it did, that's tricky. Right, and closing itself like that. No. I'm not messing with this market right now. It's highly manipulated. It's not clean. It's high resistance. It's low probability. I'm 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 basically done. So this is it for today, I think. Thank you, Money Glitch, for being in. Yeah, you are probably like literally the only person watching. Thanks, and yeah, see you again tomorrow, I believe. Bye bye.